Okay, so in this session, just going to run through the FOMC for this evening. So this is the 16th of June FOMC. So things to be aware of. Firstly, the Fed have been holding off reducing financial support in the form of liquidity. This is in the terms of buying Treasury bonds and mortgage-backed securities. So it's no surprise that the bond markets have been as they've been, really. And mortgage-backed securities is where the money's being pumped on a 60-40 split or something like that, I think. They've also been suggesting that they will be holding the base rate at 0.1 through to 2024. So they're looking to hold things pretty much as they are all the way through. They're providing the markets stacks of liquidity. Now, the thing that's spoiling things a little bit may be the high inflation that we've been seeing. They reckon it will be temporary. There's a lot of people that don't reckon it will be quite so temporary, but they also have decided to use the goal of full employment before they do anything, and they'll probably be able to kick this one down the road a bit, because there's a lot of people that haven't even been looking for jobs apparently, so that if they start coming back into the work game, that it could delay things even more. So it's a good delaying tactics effectively. Ignore the inflation and look for full employment before we do anything. Now, there's already some signs. There were 4 members last time suggesting that the rates will have to increase starting from 2023. So probably late 2023 was I think the last sort of comments. Now, this would suggest that tapering of the liquidity is going to be that they're providing is going to be before then. So these are the things that you really need to be looking for: is the tapering and the rates. And the rates are referred to as the dot plot. So you need to watch out for the dot plot data, and this will be the headlines. I would imagine, and this is what a lot of focus will be on. They will be looking at employment projections, because these with GDP. And I can't remember the other thing that's included on there. They've got a whole list of projections that they make. Inflation, that's it. So it's real GDP, unemployment, inflation, and the Fed funds rate itself. So these are the things that you've got to be looking for in the projections. Now, the next time they report these are in September, so it's quite a long way. So any comments on tapering? They'll have steered clear. They'll do their best to push it through. Everyone believes, and I've read so many commentators out there, their comments, analysts out there, in that it won't be until September before something happens. So that means we got from now till September to kick the ball down the street. Now, there is an expectation that rates will actually be increased earlier, and I get a feeling that some of this will be priced in by the big money will have already got in there. There's an expectation if they hold off that equities will benefit further. And again, big money will be in there already. They'll already planned, and they'll be doing their own calculations. They'll probably be in it. What we could see here is the potential is a bit of a knee-jerk reaction, where we see, if nothing's done, where you see the equity market fly up quite quickly, but then pull back to where the sort of levels it was running at beforehand. So watch for these markets. This is quite likely to happen. Happens quite frequently, where you get the sort of excitement for a moment, but it's already been largely priced in, and it just sort of comes back to the mean. So watch out for the mean regressions on these. Okay. Currencies that might see gains are the likes of the Canadian dollar. With New Zealand, have already started tapering. I believe New Zealand has already started tapering. Canada has likewise, or at least mentioned that they will be doing it very soon. So these are the countries which are in a different part of the curve, and they may see further gains. There's an expectation that the euro will see some gains. So there's a forecast by a lot of people that the euro will push up over the summer if this is left as is. But of course, I almost said Draghi for a moment, but it's no longer Draghi, is it? It's Lagarde and co are doing their best to keep the euro plucked back a little bit, but we'll see. If they have to say something before, that will certainly push the euro. But as of tonight, the euro might see some benefits, but be wary of them snapping back. All commodities could gain more, obviously. Oil, if we see a softer dollar coming through here, we'll see oil and gold pushing up. Gold is also against a hedge against inflation, so we could see that also pushing up or holding up better. So that's pretty much it for what to expect. I'll just go back to that last slide for a moment. That's what I'm expecting, looking for this evening. Some of that will be straight out on the within the first report, or all of it will be out in the first report, but it's then what is said by Powell afterwards. When the chair Powell speaks, it's whatever he's got to say will really get the boat rolling, sort of thing. So we've got the news coming out at 7 o'clock. The press conference starts at 7:30, so could be we could see a knee-jerk reaction at 7, and then some more action at 7:30, and particularly when it comes to the questioning. So there we are. That's this evening. That's what I'm expecting to happen. Well, if anything in tapering was mentioned, anything that sort of isn't expected, this is pretty much what I've put down here is what I can see as a consensus of expectations. If they start talking about tapering more specifically, that could see the dollar stronger for at least for a little while. And again, we might just see it sort of dollar strength for a short while and then it sort of pull back. They will do their best to keep the dollar relatively soft. They will use that soft dollar as an excuse for inflation. They'll obviously look at the baselines in terms of inflation and use that as a reason for things to be forgotten about or left alone at the moment with inflation, because last year, obviously you're comparing last year with this year, was shut down completely last year and not shut down this year, so they'll use all these in their arguments. And to be fair, if we look at the jobs were supposed to come in at about 1 million 2 months ago, and it came in at 250,000 ish. It came in better last time, but they've well, maybe they know something, or they know someone that does the figures. I'm not saying which one. Maybe they know something, and they're right, but they're expectations. But we'll see how it progresses. But that's what I'm looking for. As I say, watch out for that dot plot. Just go back a step here. Look out for the where are we going? How far back are we going? Need to watch dot plot. The employment projections, just watch what they're doing there, and comments on tapering. So there you go. That's a quick summary of what I'm looking for this evening.